things. The things that are important change on a daily basis. What we've got to do is have an ability to short circuit the whole process a little bit. What we've got to be able to do is try and recognize at certain times, at certain prices, we want to be asking certain questions. Have I got enough information to make a trade? We know that one of those things is sometimes, of course, things like dealer's keys, GRT log. GRT log is just real-time dealer information, isn't it? It's real-time dealer stuff coming in. Look for bids, look for offers. What are you going to do with that information? Is it a buy trade for you or is it a sell trade for you? We don't know because we haven't asked any questions yet. What we've got to do is we've got to go into those types of things and find the answers to the questions, haven't we? So when we look for questions, I mean, the whole point about trading is to be able to ask a question. There's very few other things that can help us ask questions. Questions develop in real time on the right-hand side, and as traders on the floor, we've got to be able to answer those questions as they come up. We don't have hours to go and analyze it if we're floor traders. We don't have hours. We've got seconds to analyze it and give it our best shot. Try and figure out what the best shot is. Try and get in front of the best shot narrative. If we can do that, we're probably going to be successful. If we can't do that, we're probably going to be unsuccessful. So when we ask those questions, for example, if I was to look at one of the big things that we ask a question from, and that is the dealer keys. You might be surprised to see today's dealer keys, for example, in the S&P coming up. Let's take a look. So here's today's dealer keys. You can see them for yourself. The S&P, we've got all the price levels that the dealers are going to make a decision on. Well, if you know that these are price levels that dealers are going to make decisions on, what are these prices? These prices are pin zones. They're not structural pin zones in terms of market technicals, are they? These are real pin zones based purely on the fact that the dealer needs to make an informed decision in these areas. And therefore, we don't have to worry what the technicals are telling us. We just need to make a decision when the dealers are making the decision. We have to try and get in front of what the dealer decision is going to be in these areas. So let's take a look at today's dealers and look at the decision that they made. Let's take a look at the S&P, for example. We'll keep coming back, obviously, because we've just lost the dealer's key levels. Let's bring it back. And we'll just find the first dealer key level, right? So let's look at this dealer key level at 53.72. Okay, so this is posted at 1:24 last night. Okay, 1:24 London time last night. 53.72. So let's mark 53.72 on the chart. So let's mark 53.72 on our screens. Right, we're way off screen here, way off screen here, right? So there's 53.72 right there. So what are we going to mark at 53.72? Well, I'm just going to mark that area, right? I'm going to mark that area. And what I'm going to do now is I'm going to look to see if the dealers had to make any decisions at this price. And if I know that the dealer's going to, see, I've dropped it a wee bit there. If we know the dealers are going to make a decision in there, we want to see what that decision is, don't we? So we just know this. We know this as a fact. We don't have to worry about it. We don't have to think about it. We just know that the dealer needs to make a position, a trade decision at this price point, right? And as we zoom out and we zoom out and we zoom out and we zoom out, we can obviously go further back, and we can go further back as far as you like in this trade. And you can see that obviously when we go further back, there's just nothing in the charts giving us any suggestion that 53.72 is going to be of any value to anybody. So this is something that we start looking at. We say, well, why would I look at 72? Why would I be involved in and around the price of 72? Why would that be a thing? You know, we can obviously go back and we can always check it to see what did develop around those trade areas. And obviously, the further back you go, what happened at 72, guys? What actually did happen at 72? Look. So when was this? This was at 10 o'clock this morning, London time, right? So what was the dealer's decision at that point? Look, we've got it on our screens. It's not hidden from you. This information, Miguel, is on your screens in advance because you've already got the dealer key price at 53.72, right? So you know with 100% certainty that this will be an informed trade that comes in here. At this stage, Michael, if it's an informed trade, do we know, Jason, if it's a buy trade or a sell trade? Well, we don't know, do we? We can start guessing about it. But when it comes into that price level, we don't actually know. What we've got to do is we've got to then look at the chart and say, that's what their decision was at that price, right? So when we hit 53.72, we start asking a very specific question. What is the informed trading do? Do we know how to trade? Do we know how to figure out what the informed money's doing, Jason? Have we got tools that can help us about what the informed money's doing? Of course we have, right? Are they absorbing buying? Are they stacking the offer? What are they doing in here? So in other words, we can go down on the floor as soon as we know that we're coming into a trade level, that the dealers are going to make a decision 100% of the time. 100% of the time, the dealer's got to make a decision here. Why? Because it's not at some arbitrary level. The dealer's got massive exposures here. The dealer needs to buy or sell this price. And what we've got to do is get in front of that dealer decision to figure it out. Let's take a look at what the dealer decision was. 53.72. Known, what, about 9 hours in advance of that trade taking place there. What was the dealer decision here? Anybody like to hazard a guess about what the dealer position was here at that point? Well, look at this buying that was coming in here. Do you see this buying? All that buying that was coming in? What was happening to all that buying, guys? What happened to all the buyers that came in during that phase of the trade? Every single one of the buyers at 72, who would have thought 72 would have been the price, right? Every single one of those buyers at 72 got absorbed. So what are the dealers doing at 72, Jason? What are the dealers doing at 72? They're selling, right? They're selling. So the dealers are getting short at 72, right? So if you can see that at 72 this morning, should you not be short with them? Should you not join in as a retail trader? Should you not also be short selling at 72s? Because you've just found out the dealer's decision at 72. They're selling 72s. So if we know they're selling 72s, let's get the business done then at 71s, 70s. How did that trade do? $2,000 profit in the next few hours, right? So it wasn't too bad, was it? Now, obviously, the next dealer key is the biggest dealer key we've got of the day in terms of the S&P, because the dealer key we had above us was 53.72. The dealer key we've got below us is actually 28.218. It's a very wide area and it's full of lots of pockets of dealer activity, right? So between 28 and 18s is a big level for the S&P. Usually an S&P level is about 2 or 3 points wide, but this one's about 10 points wide just because there's a lot of things in there. It was difficult to just give you a single price point. So between 28, we start asking the same question, don't we? There's 28 right there. So there's the sell trade. We can see it crystal clear coming in. It's short selling. We've just made $2,000 profit on that dealer's key level. And let's see what happens at 28s down to 18s. Let's see what happens. So there's 28s down to 18s. What started to happen? What happened to the book liquidity, for example? What happened to the stack that came in at that price? What happened to the stack coming in? They started to buy into that downtick. They weren't absorbing it very well, so you had to be careful. But we know that this trade area is massive. Again, this is the biggest trade area we've got for the S&P. So all of a sudden, we're now looking at that as a possible buy trade, right? Because the book is now going bid here. Strong bids coming in on the limit order book, top of the market book, right? So we obviously start watching for any signs that that's going to be absorbed off of 28s to 18s. And if it does, we're going to go bid, because our first default on this is it's going to go bid. That's our default position, isn't it? Equities are going to go bid at that price. Well, look at what happened. Seriously, look at what happened. So we had a sell trade up here. We had a sell trade there off a dealer key, and we had a buy trade here off the dealer key. And this is what happened. We went sell side dealer key, buy side dealer key, and that took us all the way into the cash open, just 2 trade levels. Was this a sell? Was this a buy? Well, the price doesn't tell us. The fact we're coming to a dealer key doesn't tell us it's a sell or a buy. It's what the activity that takes place in that area that tells us it's a sell or a buy. So when I'm trying to figure out what I'm seeing, I am now reading the tape. I'm now reading to see what the dealers are doing at that price. And if I can recognize what the dealers are going to do at that price, I'm ready to execute against that price area and get my business done in terms of getting the right sell in and the right buy in that trade, right? So this isn't surprising when we see what happens next. It's just good trading, isn't it? We're asking a question in the right areas and we're looking for the response. So how did that 28 to 18 level do, guys? Any good? Any good? It's quite a good level, wasn't it? I mean, that's sensational. And that's pretty good. And then that's pretty good. And then, of course, what happened off the 28s again in the afternoon session here, of course, was also pretty good, right? So we start seeing an awful lot of stuff, don't we? We start seeing a lot of stuff kicking off in and around these trade areas. It's not a surprise anymore. You know, when you're looking at it, you say to yourself, well, I like the idea of trading off the 28s, 1451, the trading off the 28s, boom, trades 58s. It's another $1,500 of buy side profit when the 28s do go bid. You know, they don't necessarily have to go bid. They might decide to hedge that position instead of defend the position. And if they hedge the position at 28s, the 28 would go offered. And if the 28 went offered, we'd probably be trading 53 offered at this stage, right? But when 28 goes bid, we just traded 58s. So when 28 goes bid there, we go for a massive ride north again for another $1,500. It's just never ending, is it? I mean, literally, it's just went level to level almost for the entire day. I mean, we never went through 28s and we never went through the top edge there that we had above us at 72, did we? And the key to this is that you know these two levels in advance of the dealer keys. We know that there's going to be a decision made at 72s, and we know there's going to be a decision made at 28s. So as real traders, as real professional traders, what we've got to do is get in front of those decisions. Does everybody understand what I'm talking about getting in front of these decisions? What we're trying to figure out is what these guys are going to do before they do it. And if we can't figure that out, we just wait for them to make the decision and then trade it, right? And we might be a little bit late, but when we see them going bid off of a trade level, like an RGL type idea, when they decide that they go bid and the book goes bid, you just join in then, right? So obviously we could come into this level, Everett, for example, and we might think the value is bullish. So we could start forecasting that they're going to go bid, right? So we could start, for example, buying into the bottom edge here, trying to buy the bottom edge, trying to buy the bottom edge. So in other words, what I mean by getting in front of the dealer is we know what the dealer's going to be doing without seeing the dealer doing it yet. So we're trying to get in front of the dealer to get our positions on. We're trying to get in front of their decision because we've got a fair idea what the decision is going to be. The challenge we've got with it on that trade is very simple. If we make a mistake about what the dealer is going to do, we could find ourselves getting a real sore face, right? Because we could fall flat on it. We think the dealer's going to go bid off the dealer key level at 28. The dealer doesn't go bid at 28. The dealer goes offered at 28 and starts hedging out their exposures. All of a sudden, we're trading a 53 handle, and we think, what the hell just happened? We got the dealer decision wrong by jumping too early, by making that decision too early. And the other thing we've got to remember is that the dealer can change their mind after they trade. So, for example, if I'm the dealer and I've got a big hedge to make at 28 or a big defense to make at 28s, and I start buying to defend it, for example, and I buy some more and there's a lot of selling coming in, and I buy some more and there's a lot of selling coming in, and I buy some more and there's a lot of selling coming in, I might decide that, look, I'm going to have to let this go because I'm getting too long inventory here. So we try and hold the price, take it up to 30, sell it all at 30, sell it all at 29, sell it all at 28s. And maybe we start hedging at 27s, in which case it gets very slippy on the break at 27, right? So in other words, we can change our mind. We can change our mind. We've got the ability to say, nope, I don't think that's going to work anymore. I need to change what I'm doing. But when you look back at how good that story was today, so there's the dealer key to dealer key level right there, guys, on one screen. Right? See it? 72s to 28s. And look at how the price behaved between those two price points. Look at it. It's almost like, and guys, we never called this range after the range was in. We didn't call this range because we knew what the range was going to be. It's on your tweets from 1 o'clock London last night. In other words, when that range developed, we knew that that could be a possibility 10 hours in advance, didn't we? We didn't know it was going to be a definite, but we knew it could be a possibility that that range could develop 10 hours, 15 hours in advance. And then when the range did develop exactly the way that those dealers' keys suggested that it might, well, we kind of get a sense of that's perfectly exactly what we thought was possibly going to happen today, because, well, we kind of had an idea that the market may well be rotational today because we had hit fair value on equities. Did we not say that, Everett? Last night in the tweets, we said that equities look as if they've hit fair value in the macro chart basis, and therefore we would expect to see a bit of normal business getting done, rotational business getting done. So that becomes more important to recognize these dealer keys. There aren't any other dealer keys on that chart. These are the only two that traded today. And it sold off a dealer key, and it bought off a dealer key, and it bought off a dealer key, and it bought off a dealer key. And it's just, that's all it's done today is sell off dealer keys and buy off dealer keys. So again, the idea of knowing that this could be a possibility means that we're in position to make the right question and try and get in front of the answer to that question. We're making the right question by asking, what are they going to do here? Which means as we travel towards a dealer key, we're trying to get in front of the dealers by answering that question for them. What do the dealers see here? What are they thinking? What are they pricing? What do the dealers recognize from the big board? What do the dealers recognize from the tape skills? What do we recognize from the depth of market? What decision are the dealers going to have when they hit this price? If I can get in front of them, I can get the best possible prices. The dealer will then come in and help me out because I'm already front running them. I'm already got in front of their trade. So if the dealer wants to defend this level and I start buying it, the dealer will come in behind me and buy some more, and I've got a very easy buy lift away from that price point. Simple stuff, done well. And obviously when we look at, for example, this test in these areas at 1330, what else did we find? When I see this sell trade off a dealer's key up here, what else did I find? I'll give you a clue. We just did a whole class on it. Do you remember? When was that trade there on the NASDAQ? When was that trade? It was at 940, right? 940. When was this buy trade? 1330, right? 940 sell trade, 1330 buy trade. 940 sell trade, 1330 buy trade. It turns out that we were in the middle of a dealer key at exactly the same time as a shakeout trade took place. So what's the shakeout trade then, Everett? It's the dealers trying to get sellers to come in at terrible prices at the bottom edge, isn't it? Dealers trying to get sellers to come in at terrible prices so that they can buy from them and take the market bid. It's dealers shaking out the trade at the top edge to get short into that trade area. So when the shakeout takes place at exactly the same price as the dealer key, you're starting to build a real market storyline, aren't you? A storyline that nobody else in the retail space is, even the majority in the professional space, probably have never came across, because they never have that broader holistic view of the markets. It's sometimes a very, very tuned in focus. Whereas we've got the ability to see the entirety of what they're trying to accomplish from many different angles. A shakeout at a dealer's key. A shakeout at a dealer's key top. A shakeout at a dealer key bottom. 2 rotations, thousands of dollars profit from those 2 rotations. And obviously when we tap into the retest area, of course, we're already aware that that is a shakeout price level. So we already know that there's a possibility that from that shakeout, we might be able to go bid anyway. And obviously when we tap this, we might already be able to see that as pure exhaustion. They're trying to bring in some sellers. It's called a bear raid at the bottom edge. They don't really get any sellers coming in and they just give up trying. So the market went bid away from that poor attempt at the bottom edge. And this is the same as when we tie in any piece to any piece, isn't it? The building of a narrative, this concept of building out the narrative itself. We see many articles in Reuters and Bloomberg's when they talk about traders struggling to build a narrative. They're struggling to see what the narrative is just now. They're not sure what the narrative is. And you've probably never paid a lot of attention to the fact that that's what they're saying, but now you know exactly what they're meaning by that. Traders don't know what the driver is just now. They don't know what they should be making of what they're seeing just now. They're not sure. Well, that's true of all traders, professional and retail alike. And all you do in that type of situation is you simply stand aside and you let it go. When we start to figure out that we know exactly what they're trying to do and why they're trying to do it at that price, well, we're good to go. We're ready to trade and we take the shot. And we've got a lot of tools to take the shot. Leans against order flow, leans against POCs, leans against Voltics, leans against whatever we want to lean against, right? So anytime I recognize a trade opportunity and I recognize the tie-in with other pieces of information, the order flow. So when I am about to answer a question on gold, what am I going to do? I'm going to go down onto the gold pit and I'm going to ask the question, what am I seeing? What kind of auction do I step into at that exact point? If that helps to illuminate my decision-making process, then that's good. If it cloudies my decision-making process, then I'll just leave it alone. I'm not sure what that tells me. I'm not sure that that is the right trade at that price. So, for example, when we saw gold going back towards a top edge, which we already knew about at 1530, you know, the idea of going down onto the floor of the pit means that we're now looking at 1530 and asking that question, what is the delta telling us? Well, there was a lot of buyers jamming in this trade here. There was a lot of traders getting jammed here. A lot of buyers here got jammed. But they released the valve here and let the price pop. They say because there was too many buyers. Maybe that was the case. Maybe there was too many buyers coming in at that exact point. But what I actually think it was to try and get top edge liquidity, because that's also a thing, isn't it? So if we look back at gold, you can see that the big challenge for the guys in this trade was to try and get that liquidity. So that then comes down to the ability to draw just a straight line across your chart, doesn't it? And that's all it is, a straight line across your chart. Because if I get that liquidity, now I can start making a better decision. So if I want to get that short gold, and to be fair, at this stage here, I didn't like the short gold. The value was still a little bit skinny. But if you take a look at gold at that stage, you can see we've got the retest of that big sell-off there, that fast money sell. Very slow progression back towards the top edge. And then, of course, we've got this paycheck level in the background here. And obviously, this is the candle I'm really, really focused on here. And you can see what happened to gold here. We kind of almost took over control of the top line in a selling market here. So the sell on gold there is the real trade I want, 1535. 1535. So when I hit that trade at 1535, I now see exactly what I need to see. Big sell on the book, 1535, top edge rejection, good short sell in there. Boom, there's your money shot. 74s to 65s, $900. Make sense? Anyway, we'll be getting started in Classroom, guys, in just a few minutes.